you seeing signs that we're in a bubble?
Yeah. And the obvious question is around the whole of this country and the whole of the world right now is it a bubble?
On 23rd of July 2026, the US market started falling. And what happened next shocked investors.
Hundreds of billions of dollars in AI spending and $100 oil sending shockwaves through the markets.
You know why it's confusing? Usually stocks crash when companies fail, report a loss, or slow down growth. But all these companies were doing the complete opposite of it. Google generated $39 billion in cash from its operation and still lost $300 billion in market cap. Nvidia and Amazon did not report a day. But even then, Amazon lost $120 billion in market cap. And Nvidia lost $80 billion. And this caused a panic in the market that AI boom might have just started to crack due to raising costs.
Is the AI bubble popping? You might have been watching your stocks today and wondering.
Yesterday, we saw a significant market drop that seemed to be fueled by AI disruption.
So in the last 1 week, I wrote pro earning report, investor research, and even credit rating report to understand why are US tech stocks falling, why are investors panicking despite of record revenue, and what you should know to not lose money in this madness. Let's begin with Google products. Imagine a coffee shop called Brave, which had its best year with $500 million in cash coming from selling coffee. An investor absolutely loved this company. But Brave's founder wanted to expand very, very quickly. So this year, Brave is building 400 new outlets that cost the company $700 million. So at the end of its record year, what the bank account looked like? Will it add $500 million in cash? No, it's $500 million in profit minus $700 million in investment equal to minus $200 million. So Brave hasn't lost a single dollar. So instead, despite making up $500 million in profit, its bank balance went down by $200 million. Now this minus $200 million is called free cash flow, which say cash generated from running the business minus cash spent on building things equal to free cash flow. Now look at what just happened at Alphabet. On paper, they said we made $112 billion in profit, the highest quarterly profit ever recorded in the history of Google. Alphabet operations generated $39 billion in cash, which is 41% increase year on year. But they also spent $44.9 billion on AI infrastructure. So cash left with Google in this quarter is $39 billion minus $44.9 billion equal to minus $5.9 billion. This was Alphabet's first recorded negative free cash flow since 2004. And this is not one-time expense. In total, Alphabet has committed $811 billion in total signed future purchase and obligations. And this is where the market snapped. For years, whenever a tech giant raised its AI spending, the stock went up because spending meant competence. The same news made the stocks crash, where Alphabet fell by 7% and Amazon fell by 4%. But why? Well, this question leads somewhere very wasting. JP Morgan ran the myth, where they saw if you're investing something very risky, you would want at least a 10% return. Their calculations say AI needs to make $650 billion every year. But even if you consider OpenAI making $25 billion and Anthropic making $47 billion and then assume that Gemini make $25 billion, they will collectively only make $97 billion. And that too with combined loss of $20 to $30 billion. But if you look at the news that they are signing contract right, left, and center.
CEO Sam Altman announcing a major partnership with Amazon this morning.
Announcing a $38 billion compute deal with OpenAI.
So Anthropic is dramatically expanding its partnership with Google Cloud.
This is a huge milestone for AMD. We are so thrilled with the partnership with the OpenAI team.
So do you see the irony? Loss-making companies sign a $500 billion deals. Nvidia is in talk to provide a $250 billion financing guarantee to OpenAI to lease the data centers. Why? Because OpenAI is currently burning cash. This data center is developed by a SoftBank subsidiary and the total investment is expected to exceed $500 billion. Nvidia is also separately negotiating a chip procurement financing deal with OpenAI worth up to $350 billion. So Nvidia exposure to just OpenAI could reach $600 billion. At the same time, Nvidia's own annual revenue is just $260 billion. Now, do you see The money flow in a circle. NVIDIA provides guarantees of buying builds the data centers. OpenAI raises computing capacity. OpenAI uses NVIDIA-backed financing to purchase NVIDIA chips. NVIDIA recognizes revenue and orders, and then provide more guarantee for even more projects. This is what the market refers to the circle financing law. And there are several deals like these happening between all these companies. So do you see this? NVIDIA over here is the supplier, investor, and debt grantor.
I think this will be the greatest thus far technological achievement of human history.
So let's hope that they do something crazy, because if they that happen, humans will see the next century in the brightest possible manner. This is my hypothesis on the why the US market are falling. And I just hope you learn something valuable from this case study. That's all from my side today, guys. If you learned something valuable, please make sure that hit the like button in order to make YouTube algorithm happy. And for more such insightful business or political case study, please subscribe to our channel.